The days, I think, of the round is large and thus it will get lots of coverage, I don't think is necessarily true anymore. Or at least just because you raised $80 or $100 million does not de facto mean that I or Alex or somebody else is going to write an in-depth story on it.
What makes a round interesting to you guys? Is it the players, the founder story?
To me, it's kind of the same way that founders should be pitching a VC, which is, what is the problem I'm solving? And unfortunately, there are lots of startups that are solving real problems that are insanely boring problems. And I'm like, that can be a great business. It makes a shitty story.
I guess I've heard from some reporters that they have kind of caps or minimums on what they'll cover. So like, I won't cover around below 50 million.
I would say at Forbes, we don't have a hard rule there, but there is a sliding scale. And I think part of why that is
who some of your best sources are and where you get those leaks you call me with.
The best sources are always somebody who feels wrong.
Do you worry about bias though? I mean, if you're talking to people that are disgruntled or angry, they lost out on a deal or
no, sure, you have to check it. I mean, obviously you have to check it. There's always this question of why does somebody leak? And I think there's two reasons. One,
Hi, nice to see everyone. Thank you, JJ and Haymaker, for having us here today. I have been running comms at Founders Fund for close to 11 years now, and I have to say for that whole time, these two have been two of the most well-respected and sometimes feared reporters in the game. So it's fun to be up here with them and on this side of the questions. I'm hoping we can cover, obviously, VC and tech reporting, but also ask them about some kind of broader trends in media, because I'm sure they'll have interesting perspectives. So to start out with, I guess, what do you hope to accomplish with your VC coverage, or why is it interesting to cover VC?
Instill fear.
What?
Instill fear.
Instill fear. Well, successful. I guess, why is it interesting to cover the money with so much money floating around? What's interesting about VC today?
Oh, sure. I mean, VC, it's the money of innovation, right? I mean, no matter what a startup does, whether it's in healthcare, whether it's in space, or whether it's in tech, they all, with a few small bootstrapped exceptions, require venture capital, or at least take venture capital funding. And I think, particularly as a reporter, you get to see these companies kind of grow over time, and we kind of track it often kind of from a funding stage perspective, right? Because those are these milestones. But I mean, it really, when you've been doing it as long as Alex and I have been doing it, you see these companies that are these household names, that are these things that are integral to so many of our lives or our businesses, but we've kind of gotten to watch them from the beginning and seen, what was that investment thesis when the VC, put $10 million in 10 years ago? Did it work? Did it not work? How did it change? And I think to me, that's kind of the most interesting piece of it.
I would say, growing up at Forbes, and I've been there for 12 years, which is crazy that we're all still here. We were taught to follow the money, and that the money often leads to power, influence, and outcomes. And I think, obviously, one thing that I grapple with, I think maybe Dan would grapple with too, is we don't want to exaggerate the role of venture capital in the tech ecosystem. I think, often reporters and VCs are similar in that they are most inspired talking to the founders themselves, and founders are actually going to make or break these companies often, not so much the VCs. But I do think that venture capital is rocket fuel for good and bad. And so if you follow the rocket fuel, it's easier to follow the space shuttle. If you only follow the space shuttle and you don't know any of the science, you're just like, oh, did that explode or work? I don't really understand.
Yeah. Makes sense. And I imagine, especially you, Alex, because you tend to do more long-form reporting, get a lot of pitches on individual investors and profiles and that sort of thing. What makes an individual VC interesting to you today to cover, if anything?
Well, to start my career, it was a really ugly cowboy shirt. So I think my first Forbes cover story was about Chris Sacca in sort of the Uber heyday, and that name may or may not mean anything to people. He was on Shark Tank, and it was kind of a wild person to get to know with very cheap rayon cowboy shirts. I think they're a lot fancier now that he's a billionaire. But for me, the personalities have to be kind of interesting, influential people, and then sort of doing something a little bit different. That, I think, is something that I've really leaned into more in my coverage in recent years, is I write more about emerging managers, underrepresented managers, or you'll love this, contrarian managers, because consensus funds, firm raised $2 billion, it's its 8th fund, business as usual, same strategy. No one in this room wants to read that unless it's their own company, and even then, maybe they don't want to read it.
Fair enough. So we were chatting backstage and saying all anyone really wants to hear from a panel like this is probably how you can get your funding news covered. So with the amount of funding news coming out today, what makes a round interesting to you guys? Is it the players, the founder story, something else?
Yeah, I mean, for starters, there are, as you just said, there's a ton, right? There weren't that many today, but there are days legitimately where there's 25 or 30 rounds, globally, say of over $5 million or more, and sometimes multiple ones that are $100 million or more. So kind of the days, I think, of the round is large and thus it will get lots of coverage, I don't think is necessarily true anymore. Or at least just because you raised 80 or $100 million, it's not de facto mean that I or Alex or somebody else is going to write an in-depth story on it. To me, it's kind of the same way that a founder should be pitching a VC, which is, what is the problem I'm solving? And is it an interesting problem? And unfortunately, there are lots of startups that are solving real problems that are insanely boring problems. And I'm like, that can be a great business. It makes a shitty story. So if you have an interesting problem you're trying to solve, call it for real people or something that has, it's kind of this thing of like, Axios, we have this line that's often the second line of our story, which says why it matters. And where that came from was we had a newsroom of about 12 people when we launched, and we couldn't cover everything. So we had to be able to answer that question for ourselves. And it was really how would you explain this to your friend at the bar who doesn't give a shit about this? How would you explain it and make it relevant to them? If we can answer it, and I still think that's true for a lot of funding announcements, why does it matter?
I think along those lines, just keeping in mind this audience, I think that one thing I always say to comms pros, whether it's for the company or a firm or consulting and it's not even clear who they're working with, would you plausibly read this story if it was about your competitor? And I think, if not, if it's really like we just need this announcement out, the outcome is that we need this news in the world, I think it's fine to have a corporate blog post, or even I actually am not against press releases because as a reporter, I will go back and look at them as sort of a public record. Facts at this time, these were named customers then, this was the growth. That can be really helpful when you're writing about the company a year or two later. So I'm actually not against that. I think, I always tell people, why do you really want to be talking to Forbes? What is really the goal there? If it's just like be in Forbes or be in the conversation, I don't think that's as specific. We're a business publication. We care about hard numbers. We care about bigger, business impact or trends. And so I think like if you can't present that, and if this was about your competitor, you wouldn't read it, it's kind of a waste of everyone's time to be pushing for it.
Guys, on the press release side, because I have a compendum in my newsletter every day of all the deals, so press releases are great. Unless they don't tell me what the company does until like the 8th paragraph. Drives me out of my damn mind trying to sometimes figure out what some of these startups do. Leave aside that they're all AI powered now, but yeah, it's the small little.
Well, thank you.
I want the numbers. I want the numbers. Don't mix equity and debt and just say you raised $100 million and then a year later I have to talk to your VCs to figure out how much of that was equity. Like, please just put the real facts in there.
Thank you for supporting me and saying this could be a blog post most of the time, because I still have a lot of founders who raise,
But by the way, again, with the blog post, lead with the news. Not 8 years ago, I met Jimmy at a coffee shop and he told me, oh my Lord.
I think that's important if you're a VC though, because you have to prove that you knew this person before the other VCs.
Yeah.
Fair enough. I guess I've heard from some reporters, it sounds like this isn't the case with you guys, but they have kind of caps or minimums on what they'll cover. So like, I won't cover around below 50 million, or unless the valuation is $1 billion or something like that. It sounds like probably not the case for you guys if there's like an interesting story behind it.
It's not the case for me. I generally won't I won't put a blurb up if it's less than $1 million just because it just becomes too much. But no, like there's a section of my newsletter called the BFD, and sometimes that is a massive round, right? Company raises a couple $1 billion, or there's a huge merger. There have been $4 or $5 million funding rounds in that spot where much bigger rounds were announced that day because it's legitimately, to me at least, interesting.
I would say at Forbes, we don't have a hard rule there, but there is a sliding scale. And I think part of why that is why do we cover funding rounds in the first place? Why did that become so popular? I believe it's because it's a bit of a proxy for startup growth. We don't get year-to-year revenue or cohort analysis or some of the numbers that an investor might have or a startup might have internally. And so how much funding you've raised and what your valuation is became a proxy for sort of how far along are you as a company. And I think if you're a seed stage company, the answer is often not very far. And so do you have big customers we can talk to? Do you have meaningful revenue we can talk about? Probably not. And so I think in general, we end up covering a lot fewer, let's say, seed rounds or earlier at a place like Forbes. Because if I'm only, let's say, writing one funding story a month, maybe, and maybe one new fund a month. If you're thinking just head-to-head, like all the different companies we could be talking about, often there will be a company further along in the journey that might be where I want to spend my time. So while there isn't like a hard and fast rule, like probabilistically, I'm not going to likely cover, let's say, a seed stage round.
Yeah, makes sense. My last funding-related question, everything seems to be about AI right now. Every round is an AI round. Does that make you want to follow the money and track that more? Or are you totally sick of AI and looking for something new to cover?
I'm not sick of it. I'm sick of people saying they have. I mean, AI at this point has become like what the internet was in 2001, right? Like, yes, everybody's using it to some extent or applying it to their technology, but it's not their technology. There's exceptions, right? OpenAI is an AI company. Anthropic is legitimately like that. That's their fun. But like, here's the way you can test it. If the company was founded 7 years ago and didn't mention AI until the last 12 months, good time to go back to the press releases. It's not an AI company. So I'm not sick of covering it. It is like, to me, right now, there's two huge sea changes in kind of startup business. AI is one. I think GLP-1s are the other, which is in a very different spot. But like, those are the two big sea changes in tech, and they are legitimately, I think, influencing almost every company. And if they're not, I actually, that would be an interesting thing to write about, would be the company that's just like, no, we have no interest.
Yeah, the GLP-1 thing, have you seen a lot of VC movement there? I haven't seen a lot of rounds.
I'm not so much seeing VCs move there. I think what I'm seeing is a recognition more on the private equity side that it's about to change not just healthcare, but also food consumption and other things in some really, really fundamental ways. If you look, and this will be true in VCs when it comes to biotech, and you're seeing some of this, right? When you think of all the biotech money, and that's like 25% of all venture, even though it doesn't get talked about much, so much of it is for certain heart diseases, so much of it is for diabetes and other things that are kind of obesity related. And if obesity gets like literally, slashed in half or even a third, it changes the economics of absolutely everything, and also of certain foods and food production, alcohol, et cetera.
I think we do have a weekly AI newsletter written by my colleague Rashi Srivastava, who's amazing. You should all hit her up with your AI news. We also have like a great weekly newsletter on science, and we write about AI there too. I think we see AI kind of increasingly in all of our beats. And so it definitely is hard. If you're a boring SaaS company and you just sell B2B software, but now you have AI in it, and you're like, well, now we're an AI company and that's exciting, probably not. But if you are, a crazy frontier model business that thinks you can take on Anthropic and OpenAI and has raised a ton of money, like, of course, we're not going to like say, no, we're done covering LLMs. But, I do think also, I see a friend from the information in the audience, there are teams that are so aggressive in covering hot beats like AI, like where I have to think to myself, is Stephanie at the information, or is Sharon at Bloomberg, or all these other people, are they going to quick hit this AI news so fast that it doesn't even really make sense for me? I don't know if you have this, Dan, with the newsletter, but for me, it's sort of like I think of myself as like an artillery piece, and I have to like line up my shot, and sometimes that's going to take too long, so I don't even bother with a certain story.
I don't give things nearly that much thought. That's really impressive. It's really. I mean, look, the other piece of on the LLM side, particularly these massive rounds, it's going to be. Look, I generally like most of the VCs and the founders I cover, but it is a lot more fun to watch these things collapse. And when other industries have had massive bonfires in the past, it hasn't quite been what this is going to be, because you're talking here about $500, $600, $800 million checks. It's going to make some of the unicorn stuff look like child's play, because these are not all going to succeed. And when they fail, they might fail spectacularly.
Yeah. Interesting. So switching gears, since we have Alex up here, I have to ask about the Midas list, which I'm sure most of you are familiar with. It is one of the most talked about and hated on pieces of VC journalism out there, I would say. What is it about the Midas list that gets people so worked up?
Well, I think VCs are very competitive and vain people. No, but I mean, our 30 under 30 list in VC, the Midas list, they always get a lot of attention. I do think we're proud of the fact that we try to make them more credible every single year. We've had a bunch of people try to do a version of the Midas list, and it's so much harder than it seems to do right. I started doing it in 2014, and I, feel like we've made even a lot of progress in that 10 years. But, a lot of people in this industry, you talk to some folks like Nicole Perlroth, Erica Fryer, like they actually worked on Midas, when I was still in high school. So this is a brand that's been around for a long time. We work really hard to make it as good as possible. And then what I like to joke to people, and it's kind of true, is there's usually only one VC happy with a Midas list, if that. Yeah. It's number one.
Fair enough. Dan, you sort of started, or were going to start a competitor maybe a few years ago.
Yeah.
And it fell through. Why has it been so hard for anyone to start a competitor? I feel like it's something people talk about.
I think I was doing it at Fortune, then I left and then had to do a startup, and it did not seem like the best use of my time. I'll say Midas has gotten a lot better from the analytics piece. I mean, when it started for the first 10 years, it was garbage. It really was. It was really, really bad. It didn't, and then there was this brief period of time where it included because Midas, for those who don't know, it's basically returns, right? Which is what's most important about venture capital. Ultimately, like VCs work for endowments and for foundations and for pension funds, like they're supposed to return money. And there was a period of time where it was including like private marks of companies that were worth, I think it was like 100 million or more, but nothing under that. It's like, wait a minute, but if you invest at 90 million and the company's now worth 100 million, that seems a lot worse than if you invested at 5 and it's worth 15. But those didn't get counted at all. Those people didn't exist. Anyway, I think it's gotten a lot better. Look, it is hard to do. You also have certain VCs who don't want to release the information. Then there really is such a bifurcation in venture right now, and you guys do try to do this, but like, the person who's putting the $2 million seed check in compared to the person who's putting the $200 million Series E round, they're not the same business anymore.
I think that's a really good point. We recognized this in launching the Midas seed list a couple years ago, because our number one complaint about the Midas list, besides my partner or me, was 10 spots below, and you know people well who have complained to us. I think the biggest complaint we got as an industry that we really took to heart was it's really hard for a seed investor who strikes gold with a small check, returns the fund many times over. That's like a great venture deal. But then how do you compare that with let's say, someone we've profiled at Founders Fund, like Brian Singerman, who was converting big later stage checks into billions of dollars. Like, that is really hard. And I think as the venture industry does bifurcate to kind of more like private equity with the multi-billion-dollar funds and then these sort of like focused smaller funds, that is a structural challenge, I think, in how we think about venture, like overall, like holistically. And so for Forbes, we created the seed list, and then we have this increasingly complicated model that tries to kind of balance big, bold returns against sort of like consistent high cash returns. But of course, it's going to be imperfect.
And there's also the attribution piece, right? Which you referenced. Like there's always a question of who's, particularly a larger firm, whose deal this really is. And anytime you see a VC leave their firm and then raise a new fund, you always hear in the back about the arguments over which deals are they allowed to count as theirs when they're fundraising. And it's tough because like at certain firms, things are very, very siloed and it legitimately is that person's deal. Some firms, it's a lot more collaborative, but often the senior partner, the one who's got the most power, takes the most credit.
I will say it's a little slapstick how firms, probably none in this room, but there are plenty of firms out there, because there are so many VC firms. I learn new ones every year in this process. A lot of them think that we don't have the past year's data. So someone will leave the firm and they will be like, oh, that person never existed. Like, oh, that deal was always so-and-so the whole time.
I was going to ask, how much do you check data against other data?
Thankfully, we don't even need AI to have a spreadsheet find those inconsistencies. Where it does, I think, get a lot harder is, again, questions that affect this whole industry about who was involved in the early days of a company, such as, let's say you were not a partner at a firm, but you brought in a deal and it kind of made your career. Yeah. But you didn't write the check. Was that your deal?
Yeah. Look, I mean, one of the first checks in Twitter was from an associate, but Fred Wilson took the board seat and did the work afterwards, but wrote the check. Yeah, whose deal was that? That's a good question. I mean, both? One?
And then you have, with firms that are kind of pseudo-incubating or have like co-founders. I mean, like, look at Trey Stevens, who is on the Midas list from Founders Fund. He also was a co-founder of Anduril. So you could argue that he should be maybe getting more credit, or is that VC credit? It does become like a real thorny thing there, but I think all we can promise is that we talk to LPs, we talk to kind of third parties, we try to be consistent and fair, and we do piss people off, but we try to be just very impartial about it, where someone who hates Forbes, hates the Midas list, has the same chance to make the list anyway as someone who thinks that texting me at 1 a.m. is going to help.
Alex, can I ask you a question about Midas list? Yeah. There's a perception, I think it's going to be shared by a lot of people in this room because they've written the checks, that it behooves you as the venture firm to take out an ad in Forbes around Midas time.
I think there's a great like survivor bias there, where we see this with 30 under 30 as well, where if someone gets
Come on, 30 under 30, and with all due respect, because I did this at Fortune too, it's a bullshit list.
Well, you say that, but you talk to someone like, you see someone like Gary Tan, the head of Y Combinator, tweet something snarky about the 30 under 30 list, and then I tweet back at him and I say, Gary, weren't you a judge last year? Were there any problems with the process that you want to talk about? And he goes, well, and then he texts you and he says, "Can you delete your tweet?" Like, that's me, you know. So I do think, and Gary, I love Gary, and don't want to cause a beef with him, but I do think that people who are involved in the process then maybe dunk on it because it might seem fashionable. But we have a lot of industry judges, including people from Founders Fund, including from all the big firms.
No, I know there's judges, but it's so ridiculous.
I'm just saying, if it was as bad as people thought, so many big names in the industry have been involved at this point that you would have hard evidence. Instead, I think what you have is Joe McSo-and-so from Stanford Business School gets 100 people from the business school to send in recommendations. That actually annoys the hell out of us, makes us not want to put Joe on. But the judges like Joe, and he makes it anyway to our chagrin. And then Joe tells his whole business school class, that's how you make the list. You get 100 people.
Here's, I guess, what I'm saying. So, and then I'll shut up. This is what I guess I'm saying. Like, so Midas list, it's numbers, right? And Fortune 500, that's numbers, right? It's analytical. And I'll speak for my Fortune, because you were at Fortune too. We did the 40 under 40 list. Like, do you use some metrics? Sure. But in the end, it's a group of people deciding this woman, this man deserves to be on the list and this one doesn't. There's no real analytics to it. It's a beauty contest to a certain extent.
I think there's definitely a big difference between quantitative and qualitative lists. I think it is a reality that pretty much every big media company in tech has a qualitative tech leader list at this point. We just saw the top people in business list come out from, I think, was it Time Magazine or Fortune? Maybe it was Fortune, our former employer. But we've seen every.
Yeah, I was in the room for that list too.
I'm sure
it's
Axios
ridiculous.
has a list as well at this point.
We do not.
Oh, come on.
I'm telling you, we don't have a list.
I'll go try to find one that Dan doesn't even know about this somewhere on his site.
I got to move it along the list, as you can see.
And every
VC,
VC firm here probably wants to be partnered on some list as well. I think the question for me is, like, does this list need to exist? Does it help the industry? I hope that Midas does, because it is quantitative and because it is a historical record there. And then you may not like 30 under 30, but whenever we see an alumni make it big and we feel good about it, like, it is nice to have maybe helped in some small way on their journey. Of course, if they go to jail, it's a different story. But maybe they do both. Maybe they make it big and they go to jail.
Love that. Okay. So obviously, you guys have been doing this for a while. You're very well sourced. Can we talk about who some of your best sources are and where you get those leaks you call me with?
Whenever Dan stops texting someone back and they get upset at him, that's my best source.
I mean, look, you know what's so two things. One, I will say, to me, one of the best ways still from a sourcing, I still, and I probably shouldn't because of who owns it now, but like, I still use Twitter DMs a ton, only because when someone tweets something, like, if they actually do it, I know they have the app open at that very moment. And it's a really handy thing, because an email, maybe they read it, maybe they didn't. A phone, maybe. I mean, the best sources are always somebody who feels wronged, right? In some way, for a good story, right? And that could be a senior person, that could be a junior person, that could be the spouse or a friend. I will say one fun trick, which doesn't work anymore in our remote age. Whenever you used to hear somebody, like, say, quit a venture firm or a company or something like that, the easiest thing to do was always to call the front desk and ask for them. And because the receptionist thought, oh, he doesn't work here or he just because they didn't know better. That doesn't work anymore. It's very upsetting.
Do you worry about bias, though? I mean, if you're talking to people that are disgruntled or angry, they lost out on a deal. Or
no, sure. Obviously you have to check it. I mean, obviously you have to check it. But I mean, in terms of, there's always this question of why does somebody leak? And I think there's two reasons. One, somebody's upset for whatever reason, valid or invalid. And secondly, there are people who are just gossips. And I think the best reporters, or at least with your best source relationships, you're sharing information. I think most of us have kind of a treasure trove of stuff we can't report, but we absolutely, like, I would swear on a stack of Bibles it's true, but it would not pass the test from a journalism perspective. And some of that's pretty salacious crap, right? Like, VCs do some things. So you can have those conversations with sources and you go back and forth, and then, hopefully they give you something. Now my job is to check it. You can't, take it verbatim, with maybe a couple exceptions. But yeah, you're sharing information back and forth. That's the best source relationship.
Yeah, I mean, just recently, like, a couple different twists on that. Like, one was we got tipped off that Stripe was buying Bridge.xyz. And Forbes, we don't publish off a single source. We need to confirm. We need to feel like we understand why the person spoke to us. If we don't know who the person is or why they shared with us, it'd be very rare that we would use it. Like maybe if it was documents from a government employee who could go to jail or something and we don't know who they are, but the documents are real, maybe we would discuss that. But usually we want to know who the person is, guess what their motivation was, try to understand that context, because we don't want to be played or a mouthpiece for some chip on the shoulder either. With that case, for example, Bloomberg, I think, ended up breaking the news that they were in talks while we were trying to confirm the deal. But then the next day, we had 4 people telling us it was for $1 billion. And we broke that news, which I think was kind of arguably like more important in the last minute of the deal. So we were really proud of that one. But like it sucked in the moment while we're trying to get that confirmation, feel like we know this is real, because we don't want to publish, oh, they're in talks, and then the next day someone's like, well, you got played by a bridge investor or something. Not saying that's who the source was, but those kinds of things could happen. So we would rather have been second and really right there.
I guess somewhat related, I've seen a lot of conversation about, off the record, on background conversations recently. Do you guys have any thoughts on when you'll take a call on background or off the record, or when you will not take a source?
I'll usually take a call on background, and then if I think it's important, try to put it on the record. I mean, obviously the context is very important, right? Like, what's the thing? But generally, I'll talk on background to people. I think we don't have as many rules and regulations probably as Forbes has, as even that we had at Fortune. But yeah, I usually talk on background. I mean, off the record is a very tricky subject, because off the record really means you can't use it in any circumstance. Now, you can have a conversation with somebody else and then try to get it, which is kind of what you do. I find off the record not useless, but like that. There's got to be a very good reason for that.
I think like off the record for me is like, I have cancer. You're writing that I got fired from my firm, but like I really legitimately have cancer, and like it would be a dick move to write about me leaving my firm, and we'd be like, wow, we really need to think about that. But like that to me, off the record is rarely. That's like the code red, because for us, off the record is in one ear, out the other. And by the way, one time that did happen to me. And we wrote a story like a year later about how this person was dedicating the rest of their career to trying to invest in cures for cancer. So like I think it was really good that we paused on that one. On background, I think can be really helpful to just build context and understanding. Make sure you have the full picture, or talk to people who, for whatever reason, don't have permission to talk. One thing I deal with a lot, especially with profiles, is that companies will often have to give permission to a venture firm to talk, or the investor at the firm maybe doesn't give interviews very much, Erin. Sometimes that can be a good workaround. What I don't like is I've seen a trend a bit of certain firms or companies trying to use on background as basically a tactic or a weapon to control the narrative, where it's basically like, I'll talk to you on background, and then you can come ask me for permission for whatever quote you want to use, or we have to go back on the record on that. To me, that's basically saying, we will only give you a quote if we control what the quote is. It may not be classic quote approval, but it feels uncomfortable to me, like that is not the point of the conversation. That is not really in good faith. That makes me your mouthpiece, and so I really don't like when that happens.
As somebody who doesn't quote people all that often, I mean, my basic feeling is my job is to serve the audience, right? Is to tell them something they don't know, or to elucidate something they do know. And if the background conversation can get me to that point, great, and I can get that point again, so long as I have reason to trust and believe the person. And I think all of us who have sources, there's certain people, there's a handful of people who I kind of take to the bank because they've never steered me wrong over 20 years. However, if you do steer me wrong, I will probably never, even on the record, believe anything you say. Like if I believe the steering wrong was intentional, right? Obviously, people get stuff wrong.
And I do think that's a good point, because sometimes people are like, why should we trust you, or why maybe now you're biased politically or something. This is something we grappled with. Like I published a story with a couple colleagues last week about AI policy in the new Trump administration. And it's sort of like, okay, well, look at my record. Have I burned anybody? Have I really screwed anyone over? Because Dan and I are basically only as good as like one huge screw up. And that destroys our reputation. And so I think similarly, if you're talking to us, we might trust you until one huge lie or screw up there, and then you go on our don't trust list. And so I think for VCs, that should hopefully be relatable, that this is, they're both super reputational industries.
So we have a couple minutes left. I wanted to ask you guys about just broader trends in the media, especially following the election. A lot of people are talking about kind of alternative media, podcasts, Substacks. How do you guys think about those kind of alternative channels and needing to utilize things like X or podcasts or whatnot to build your brands? And how are we all going to be consuming news in 5 years?
I mean, I don't know about the building brand. I always used X/Twitter really as a news source, kind of almost as a kind of global newsroom of sorts, right? Like I'm usually working out of my house in suburban Boston. Like it's a way I can almost communicate with Alex and with other reporters and people in the industry. I mean, I had a podcast, we had an HBO show. I've done these things. They're good. They're useful. They're different. And I did an event here on stage, 4 weeks ago. So live is a piece of that too. Different mediums are good. I think they reach different audiences in different ways. There's things you can do in print that you can't do in audio, and there's things you can do in audio you can't do in print. In terms of consumption, it's dispersed, right? Try to read as much as I can in as many places. I'll admit, I'm on every social platform, but it is hard to be actively on every social platform.
I'm spending a lot more time on Blue Sky, not for any sort of like political reason, but because it does feel like engagement there is much more organic and lively again. Twitter/X for me has become more and more like I have a big platform, but people are not really paying attention. Like there's no one sitting and everyone's in the back talking to each other. And so I have to be where my readers are. I have to be trying to engage with people. And so I find Blue Sky right now gives me hope for at least like having that feedback again. Twitter, there are a few people, and especially tech leaders and other journalists who I can talk to, but it does feel a little bit just empty for me. I know it works really well for other people, maybe like in the industry, but I think for media, it's gotten tougher. And I also think I have to explore multimedia in the months to come to reach audiences. You look at Chloe Abrams, I think Chloe, on YouTube, 4 million subscribers. You look at Pirate Wires, which you guys have helped launch. There are really flourishing new types of platforms. There's only so much we can do as a sort of more traditional brand, but I think we have to experiment. It would be crazy to say let's not.
Can I just add, there's this misperception, I think there's always been this misperception that Twitter has been this great driver of traffic to media websites. It's always been a crappy driver. Like very small, compared to Facebook is still much better. Google is obviously, and it might go away with AI, but X has never been a place where, you want to drive a lot of traffic, post your story there.
Okay, finally, any predictions for 2025? Who's going to IPO? Who's going to jail?
No one.
Anything else spicy?
I think we're going to see Service Titan and a bunch of these big unicorns. You can kind of check the top 10 or 20 of our Cloud 100 list, for example, who are going to go out. I don't think it'll be Databricks or Stripe or sort of the really biggest ones, but I do think it'll be that sort of mid-tier of Service Titan-y companies that goes out this year or in the upcoming year, and I do think that'll kickstart a lot of activity in the ecosystem. I think people are sort of waiting. The irony is I think that would have happened regardless of who won the presidential election, but I think that people are going to take Trump's victory as like an even better signal to kind of be aggressive there, also with M&A.
VCs, I think, have been cowards with their IPOs for about 3 years now. I don't see any particular reason why they're going to get courage.
So in a year, we can see who wins that bet. Yeah.
Perfect. Thanks, guys.
Thank you.